this is the green candle. This green candle body is long and we got a very small red candle. This is called Harami candlestick pattern. So below the low of the red candle, one can enter into the short trade. Hi friends, Chitra here. Welcome to my YouTube channel. Hope you're all doing good. So today we are going to study about Harami. What do you mean by Harami and how can we trade using Harami pattern? So what is the meaning of Harami? We can see that. Harami is a two candle pattern. The first candle is usually long and the second candle has a small body. Okay. The second candle is generally opposite in color of the first candle. See, for example, we have two Harami patterns, that is bearish Harami and bullish Harami. On the appearance of Harami pattern, a trend reversal is possible. If we are in the bullish trend, we can expect a bearish trend after the Harami candlestick pattern. So, we can take a reverse trade at that particular point. There are two types of Harami patterns. One is bullish Harami and the second is the bearish Harami. You can see in this picture here, this is the downtrend and continuously we can see the red candles. Okay, and here at the bottom, we have to expect a bottom. At the bottom, we have to see a bullish Harami pattern. We can enter for a long. Here, after the red candle, this is at the support and at the bottom, we got the bullish Harami candlestick pattern. So, one can enter into the long trade above this green candle. So, we can see the candles are taking support at that particular point and after that, you can see the reversal from the particular level. Now, we can see what is bullish Harami? So, as the name suggests, the bullish Harami is a bullish pattern that is appearing at the bottom of the chart. That is very, very important that we have to find the bullish Harami pattern at the bottom of the chart. That is at the bottom of the downtrend. The price is continuously falling here and all are red candles and we have to find the Harami at the bottom. That is at the support. A bullish Harami is a candlestick chart indicator used for spotting reversal in the bear trend. So here it is a bear trend and it's what this bullish Harami says, bear trend is going to over and bulls has taken the control. So a new generation is going to form. That is, we can take long after the, that is at the above the green candle. That I will show you how to enter into the trade. Okay, that I will show in the trading view. What is bearish Harami? The bearish Harami pattern appears at the top of the uptrend, allowing the traders to initiate a short trade. So here you can see this is the uptrend and at the top of the trend, we can see there is a small red candle that is smaller in size when compared to the green color candle. So what does this mean? That is a new generation is formed. Basically, the word Harami or the meaning Harami means pregnant in Japanese. Okay. And we can see how can we trade using the particular Harami candlestick patterns. That is, we have two types of patterns, that is bullish and the bearish Harami. So now we are seeing the bearish Harami. So first candle has to be large and green. This is a green color candle and this is large and green. So this is the bullish candle. And the second candle should be red and bearish. This is the second candle and this is red and bearish. The second red candle has to be smaller in size. This is smaller in size and should come somewhere in between the body of the previous green candle. It should be very small. That is very, very important. And bearish Harami pattern should occur at the top of the trend. That is at the resistance level. Then we can expect a reversal in the uptrend. That is, there is a pause for the bullish trend and bears are in control. This is BankNifty 15 minutes time frame. So I will show you how to identify the Harami pattern and how can we trade using that. Here we can see that the price is an uptrend. Okay, that is price opened at 9:15 here, that is on 9th Jan. Price opened here, that is a red candle and price was continuously moving above the 5 minutes candle and price is in the uptrend. And at the resistance level, when you see at the top of the trend, this is how we will identify the top of the trend. So we have to find the resistance and support. That is, I have identified the resistance. We have a major resistance here at this particular zone because here we can see this red candle, that is we can see the rejection candle of the previous day 9:15 candle. We got a rejection from here and we can see the price is continuously moving uptrend and at the resistance level we got a small red candle. That is, this is the green candle. This green candle body is long and we got a very small red candle. This is called Harami candlestick pattern. So below the low of the red candle, one can enter into the short trade. Here, this red candle, so one can enter into the short trade below the low of this red candle, and stop loss is high of the red candle. So here we are entering into the short trade. The level is 42,657 and Bank Nifty made a low of that day is 42,337. Okay, so we got very nice trade on that particular day. So we can see how much points we got on that particular day. So here if you are entering short and the low made is here, this is the low. So we got like 300 plus points in this particular trade. So the main thing is we have to identify the bearish Harami at the top of the trend, that is at the top of the bullish trend. Top of the uptrend, we have to find the bearish Harami pattern, and after that we have to enter at the low of the red candle. The stop loss will be the high of the red candle. This is the pattern we have to identify. Now we can see how can we identify the bullish Harami pattern. So if you identify this pattern in the higher time frame, it will be very powerful. So this is Nifty 15 minutes time frame chart, and here you can see this is the downtrend, that is bears are in control. So we have to find bullish Harami pattern in this type of pattern, that is the bears are in control, that is price is continuously falling. At the support, here we can see there is a major support, and this red candle is, the body of the candle is very long, and here we got the green candle. You can see the green candle, the body of the candle is very small. So one can enter into the long trade above this green candle here. So if we enter into the long trade, the stop loss will be the low of this green candle. So this is the stop loss. So if you enter into the long trade, the stop loss will be the body of the low of the green candle. So here if you enter into the long trade, you got a very nice trade on that particular day. So if you are entering here, that is at 16,892, the Nifty made a high of 17,046. So you got like 100 plus points in this particular trade. We can see how much points we got. So if you are entering long above this green candle, so we got like 150 plus points in this particular long trade. So the thing is we have to identify the bullish Harami at the bottom of the trend, that is at the support. We have to find this pattern. We should not enter in between. So you can see here, this is the red candle, that is price is continuously falling, and if you are finding the green candle, if you enter long above that, you should not do like that. We have to find the particular pattern at the bottom or at the top of the trend. Then that pattern will be very, very powerful. Now I will show you how can we identify this pattern in the 3 minutes time frame. So here the price is in the downtrend and price reached at the, that is price touched the support zone. Here you can see that we can see the major support here. Okay, here we can find the major support. When you see, this is the red candle. So this is the big red candle, and this green candle is very small when compared to the body of this red color. So the thing is we have to identify this bullish Harami pattern at the bottom, that is at the bottom of the trend, that is at the support. So one can enter into the long trade above this green candle, that is high. If the high of this green candle is taken away, one can enter into the long trade. Okay, and you can trail your profits. Once you enter into the trade, the stop loss will be the low of this green candle. So if you enter here, you will be entering in this particular green candle. So you can trail the profits. If you are using any EMA, you can trail your profits with 5 EMA, or you can trail your profits with 20 EMA. Here the price touched the major resistance level. Here there is a major resistance level. You can see on the previous day we got the major rejection at that particular level. On the same day, that is the 12 o'clock candle, we got the rejection here. So this is the resistance zone. At the resistance level, we got the, this is the green candle. This is the bullish candle pattern, that is a green pattern, and we got a very small candle, that is a red candle. So what does this means that at the resistance level, the bulls are in control. So the power is for the bulls. At the resistance, there is a pause for the bullish trend. So bears took control here. That is the meaning of this red candle. So one can enter into the long trade below the low of this red candle, and you can see the fall after that. again the price has fallen like 883 till 827. That is like some 60 points we got a downfall. This is my Telegram channel, that is Trader Chitra. So those who are want to join my Telegram channel, they can log in, and this is a free channel. Here I will be posting the Nifty and Bank Nifty levels for tomorrow. That is daily I will be posting the support and resistance for the next day. So you can use this chart and you can trade. And here also I will share the levels like Bank Nifty and Nifty levels, major resistance and the major support. Also I will be sharing on everyday analysis. Here I will be sharing my live analysis. So those who are interested can join my Telegram channel. Thank you. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.